The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 22nd. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out with the bulls and the bears what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in 877-927-6648. If you can't dial in, well, let your fingers do the walking. You can send me an email, steve@tfnn.com. I'll do my best to get to that. Of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow up 262 points, 25,059 is the print. S&P's up 20 points. That's about 0.7%. NDX 100 up 0.5% or $32. Russell's up 10 points. That's 0.7%. Semis are the weak one out here, up 0.25% or 3 points. So everything is mean and green to the upside. Spot volatility index back 5% or back $1. Gold is even up 80 cents. Silver is flat. You've got light sweet crude up 22 cents. Leading the charge here dollar-wise, the upside is stamps.com. STMP up nearly $20 or 11%. Zebra Technologies up $14 or 11.3%. Tesla up 11. Priceline up 9. Align Technologies up about 8. Lending Tree is the leader to the downside, off $28. 777 sounds like somebody hit the one-armed bandit there to the downside. McGuire Infrastructure or something along those lines down $25. Boston Beer Sam Adams taking it on the chinny chin chin down $21 or 10%. Of course, I want to look at what you want to look at. And I've got treats for everybody out there. I've got something for the bulls, something for the bears out there. Let's take a look at, because the tools that you and I use, right, they are great at being able to identify tops and bottoms out here. So we take a look at what took place in the futures market since you and I were last with each other. They went zoom, zoom, zoom to the upside, then zoom, zoom, zoom to the downside. I had shared with you, it didn't matter to me yesterday whether the Dow was up 250 or down 250. These markets are still going for their all-time highs. This is a bullish market. You had the correction you've been looking for really the last 2 years out there. But let's just step back for a moment. Take a look at what's taken place on a 30-minute chart for the NASDAQ. We can do the same thing, I believe, here for the Dow. You'll see the same things out here. You'll see the same patterns that you and I like to look at. If you look at the low that was made yesterday, this was about 9:30 last night, and you just start doing your wave counts to the upside, you will see that we're price maxed out thus far on a short-term standpoint. You see, we can find something for bulls, we can find something for bears, and the market likes to sing in the key of G. It's the Stevie Wonder key of G out there, and that is exactly the letter or the wave number 7, where the NQ found its intraday high. Now, that may be the high for the day. We may continue to see a pullback from here. If that gets taken out, though, and you are a short-term trader and you are short, get out of the way because this thing will recycle to the upside, probably an A to B equals CD to the upside out here. As we take a look at it right now, no big damage. It did what it was supposed to do. It's like running a race out there. You run the race, you need to take a deep breath. That's what the NQ is doing right now, just taking a nice deep breath. Now, if we take a look at the daily time frame for the NQ, what is it doing out here? Well, it's only found its second wave, albeit some resistance. Yesterday's high, because of that shooting star, the opposite of your hammer candle, that sets up a resistance level. But support inside the NQ, Stevie's red line. That's priced at 67.50 and change out there. Price needs to close below that in order to suggest that there's a further retracement that would be underway. So we can take a look at the intraday charts. We can use the same patterns out there, and there's a number of them, to help us identify tops and bottoms. And we can always use Stevie's red line. Where did price fall to yesterday? Stevie's red line. That is a level of support. Okay, so that's two elements that we can take a look at. Let's just simply go ahead and continue to break down the NQ or the NASDAQ 100 out here. Let's take a look at the NASDAQ 100. Let's go see what's going on under the covers. And if we take a look at the daily time frame, as we speak right now, 1:12 in the afternoon, you're going to see that we have a nice bullish crossover. And that's taking a look at the TAS market breadth. What that means is we're taking a look at all of the issues. If we total them up, it's like 108 or 109 issues in the NASDAQ 100. That's correct. And we take them and we see how many of those issues are trading above resistance. Resistance would be above the top of the box. Well, there's 26. How many are trading below? Well, it's 25. It's not the coin flip out there. We've got Stevie's red line. We are slightly bearish, or I'm slightly bullish out here with regard to NASDAQ 100 market breadth. It is the bulls that are winning this battle. If we take a look, I mentioned during the last couple of years out here, we finally saw the correction. If we take a look at different corrections inside of the NDX 100, we have to go all the way back into February 19th of 2016. That was the last time there was any correction of any kind of meaningful figure, meaning greater, meaning a double digit. That was a 15.8% correction. Now, we're looking at a line chart. That means we're going from close to close, not from high to lower. So you could have a different percentage out there. It's so much easier to see, visibly see, and take a look at with regard to a line chart. What do we have this time? Although rapid. We had a 10.2% correction out there from high to low. The low coming in on February the 8th, and taking a look at this line chart where things closed. Over the course of the last 120 years, we get a 10% correction on average once. We got this year's 10% correction. That's it. The markets are headed higher. This is not the top. This is not how markets make tops. Let me be more clear. What took place at the high on January 26 is not how markets make tops. When we come back from this break, we can take a look at that. For Alex, he wants to take a look at PKI and TXN, so we'll do that for him since that came in yesterday afternoon. Of course, I want to look at what you want to look at. Steve Rhodes with TFNN. We'll be right back. You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. Last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18th, 2018 placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So let's go take a look at a couple of equity positions here. This is for Alex. He wrote in yesterday, didn't get the message till after the show, and he wanted to take a look at ticker symbol PKI. It is PerkinElmer Inc. And I believe that Alex is longer, just likes these charts. So let's take a look at the daily time frame chart out here and see what we see. Here is one of the issues that you have on a short-term basis now, Alex, with regard to PerkinElmer. The first thing is that we can see that it's trading below its daily TAS market profile. In fact, the last time that a profile formed out here was on the February 8th time frame, and price was below that profile. That's typically a bearish message out here, which suggests that there is a possibility now that this is actually setting up an A to B equals CD to the downside. So that's what I would read from this chart and take a look at the way profiles formed, when they formed, where price was, and seeing that we've only made a retracement. If we also take over Stevie's Ninja Trader chart and we go take a look at Stevie's red line, we'll see that yesterday, much like the indices had formed that little shooting star, the opposite of a hammer candle out here, and that price is trading below Stevie's red line, just barely. 76.50 is the number. We're trading at 76.15. Ideally, you'd like to see price close above that to then suggest, okay, I'm going to head up into the 82 level out here. What you want to really be careful with on this equity from a daily perspective, long term, we'll have a different view as we take a look at the chart. But we will see that the price oscillator, the difference between two exponential moving averages, 19 and 39, gets us down to about the zero level. The bottom reading says 0.082. So we're basically there. What you don't want to see is for Stevie's red line to continue to act as resistance for the price oscillator to get below zero and continue falling. That's a bearish message, and that would signal to me then that you either go retest the low from February 8th out here in this equity, or actually take it out and form an A to B equals CD to the downside. That's what the daily chart says to us, and those are the levels that I would be watching if I were you. On an intermediate term time frame, what we can see is prices right above a level of resistance, that being the top of the box. So here's another level for you to watch, 76.02, your 76.18. As long as it stays above 76.02, then okay. But combined with the first daily charts we looked at, if this falls below or closes below 76.02, it says 71.19, the bottom of its weekly profile out there. And it's a bullish structured profile. You would expect or anticipate that that is a price level that would be explored. So that's what I see in taking a look at PKI. You also wanted to take a look at TXN. I think, is that Texas Instruments, TXN? Let's put this up on the screen. It is Texas Instruments out here. Now, in taking a look at this chart, let me get it set up on my other set of charts as well. This doesn't look so hot right now. Now what I mean by that is we've got to go see if we can find a bottom out here. When I say it doesn't look so hot, I'm referring to panels 1 and 2 on the left side. Price is in between the daily box, but it's below the weekly box, 106.96. And that's a level that you really need to see Texas Instruments get above from an intermediate term standpoint out here. From the daily time frame chart, let's simply do this. Let's pull over Stevie's other chart. And what we can see is that Stevie's red line is continuing to act as resistance. It has for the last 4 days out here. Now, that number is 104.69. You really want to see price get above that because you can see that the price oscillator right now for Texas Instruments is below the zero line. That means we have a falling price oscillator below zero. Would suggest at that stage, as long as that condition is in place, this is either making an A to B equals CD to the downside, or price is going to come down and test that swing point from sometime last week. I'm going to assume that's February 8th or 9th out there. That's what I see when I take a look at Texas Instruments out there. So hopefully that helps you. 106.96 is a key level for this to get above in order to give you the run up into the 116 type area. That is for Alex. I hope that helps you out. We had another question that came in as well. Let me get back to the phone here. This one coming in from Eric. Eric says, I have 2 questions. First, what do you think gold is doing? Now, you put G-O-L-D. I don't know if you meant gold or you meant the equity gold. Hey, that's a stumper out here. Let's see what the second question is. What do you think of the sell-off of yesterday afternoon? I know you have said that we are going much higher, but that sell-off yesterday has to go into the mix. And today, the Dow is plus 60 points off its intraday high. So let's go to the second question. Okay, because that is a very cool question to ask. It's kind of like a setup and volley question. I don't know how you knew, Eric, to ask that question because you, like many others, very likely interpreted yesterday's action to be bearish. In other words, the Dow was up 300, finished the day down minus 160, and many of you had to say, that Steve-O guy, he doesn't know diddly. And I did not meet Bo Diddley. But here's the deal. We're in these vertical markets out here, and vertical market trading tactics require a whole set of different strategies in order for you and I to be able to identify tops or bottoms out here. Let me show you what I mean. If we take a look at yesterday's action out here, when the day came to an end, even though those bears were licking their chops, they were licking the wrong chops out here. Why does Stevie say that? At the end of the day, and you know how I hate to say at the end of the day, but at the end of yesterday's trading session, you had a trend index reading of over 2. I think it was 2.15 or something like that. Well, let's not guess. I'll tell you the exact number. Oh, it's 2.15. That's number one that you had. But combined with that, see, this was the gift. This was the gift for the bears to get out of those short positions and the gift for the bulls to get back in. Because what we also had yesterday was a spot VIX index reading compared to its 3-month brother out there, that when you take a look at those ratios, gave you a ratio above 1. And if you're watching this on Tiger TV, you're going to see the past other instances out here where we had those same conditions. And those same conditions led to a bottom. So yesterday's move, my take, Eric, when you take a look at it and you put together this set of tools, this strategy to be able to identify tops or bottoms, this set up a bottom. It was an absolute gift. So if you're bearish out there and you decide that you want to go ahead and bet against this, just be aware of what is in place out there. Go back and do your homework, do your chart like I've done it, go back as far as you can and see what the odds and the probability is that yesterday marked another bottom inside of the S&P 500. With regard to gold, we'll answer that question when we come back from this break as well. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, and to answer the second part of Eric's question out there, because it was a great question, and it was a good setup to be able to identify using different tools out there that the market generates in order to help us identify bottoms. And that's what we took a look at. With regard to the Dow being 60 points off the high, there was nothing more than taking a look at yesterday's low in the equity futures contract. Look, you don't need to trade the equity futures contract. But if you want to really understand the patterns of what the market does and why on multiple time frames, then you must have access to it. Because otherwise, you are limiting yourself to making decisions about a market that is only operating for 6.5 hours. And you are going to have both hands and both legs tied behind your back trying to make decisions out there without all of the data. You see, with all of the data, you and I can make this decision and say, aha, what price did today inside the Dow equity futures contract on a 30-minute basis was got up to wave number 7, letter G, as you're taking a look at it. Often the point in time when an instrument begins to pull back. In this case here, the Dow equity futures contract has just simply pulled back to Stevie's red line. That right now it's at 24,972. Thus far, it's held its support. I don't know if it's going to hold its support or not out here. Again, intraday trading, a whole different animal out there. And those folks that are able to do that, like I said yesterday, they must be put up on another pedestal out there, okay? Because it takes a whole set of you know what in order to be able to trade like that. And you've got to really be able to interpret the information quickly and accurately out there, especially the way that these markets move. But 60 points off the high, how many ever points off the high? As soon as it got to that wave number 7, told you, okay, it's time out. Now, with regard to gold, what do we think of gold? We're going to go to gold as the actual element versus the ticker symbol, GOLD. In this case here, what do I think of gold? I think gold may have formed at least a short-term bottom. And you might ask yourself, well, now how in the heck can you say that? And the answer is very simple. We will use the exact same set of tools that we've just used for the last half hour. You see, it works on all time frames out here. You know, the way the stock market makes bottoms and tops, price moves lower, does with less relative energy, the bulls show up. The way they show up is they generate some type of bullish reversal candle, such as the Morningstar candle on this 120-minute time frame chart for the gold contract. It did that at 6 o'clock this morning. Now, at the same time that it was doing that, or really I should say, since it's a 120-minute chart, at 4 o'clock this morning, it got to wave letter what? Wave letter G. Number 7 on the way down. These patterns, these wave 7s, these price relative strength divergent patterns out there, Stevie's red line, these TAS profiles, these are the tools that you must know. And if you don't know them, I am happy to teach you how to do that. It's done each day through the newsletter in the way that I show folks how it is that we're calling markets, as well as just simply through the workshops that you have access to when you're a subscriber. So what we know about the gold contract on a 2-hour time frame, it generated 2 of the patterns that you and I love to see, either at tops or bottoms. Look at the last high on the 120-minute time frame chart that took place in gold, the exact same or opposite of what took place at the bottom. And now we have gold moving higher. What you do is you step from here to then start to go take a look at what's going on the market profile system on the 120-minute time frame. Well, when my newsletter went out this morning at 6 o'clock, what I suggested to subscribers, because we're long metals, was that we would see gold bounce up to 1329. It was only it was maybe 1320 something out there, wasn't it? 29. That was going to be the first test. And what we said was we need to see gold close above 1329 to confirm the pattern that you and I just took a look at in order for gold to continue to go higher. Now, go higher to where out here? Well, look, on a 60-minute time frame, 1334 is really the next level of resistance. It's the next profile level that is in play. If gold can clear 1334, then we can get a run another $20 higher into the 1354 to 1357 level. That happens to be the top of the daily and top of the weekly profile. That is what gold looks like that's what gold looks like right now based upon those patterns. So excellent questions. Thanks for writing in and asking them, because what you helped me to do is just really prove the set of tools that you and I like to use to be able to identify what the markets are communicating. All you and I are just really psychiatrists or psychologists. We're just measuring the emotions of the markets. That's what that seventh wave letter does. That's what price moving lower with less relative energy does out there, or moving higher. And I said that the top that took place was not the high. That is not how these markets form highs. If we take a look at this kind of blank Dow chart, remember all the ruckus that was being made about the high RSI reading, the relative strength indicator, like the highest we had seen in so many years out there, and that was like the indication of a top. And look at how that was able to work itself up in basically 1 week's time period. You're down, this is a weekly chart, you're down at about 60.7. You were up somewhere around, I don't know, what was the exact number out? I won't give you the exact number, but around 92. So right around 92. That's now how markets will make a top. And I'm just going to take this weekly chart back here. We'll just simply come back to the 2007 top and the 2009 bottom. Here's the 2007 top. What happens is price goes back after its highs and goes higher, just like it did in 2007, and it does it with less relative energy out there. Now, that is a real setup. That's a real possibility the next time we get up to the highs. Am I calling this to be the high in the marketplace? No, I'm not, but I do know what it is that we have to be watching out for. When the market does make its final top, whenever that is, and it may be years from now, I have not changed my call on the Dow from 30,740, and quite frankly, beyond that. But we just have to take things one step at a time. And right now what we have is we've got that relative strength index well down below the 70 level. It's going to make its way back up above 70, but may not make its way up to that 92, where price will go ahead and take out those highs. And that is when we have to be cautious out there. These are the exact same patterns you and I have looked at on the 2-hour chart, on a 30-minute chart, and this is how the market actually sets up and makes those highs out there. Are we there yet? No. Is that part of the reason why Stevie says we're going back up to the highs and beyond? Absolutely. Let alone on a longer-term basis, we've got consolidation patterns. Let alone we've got so many different bottoming signals that are out there that tells me we are also going higher. It doesn't tell me when. It doesn't say maybe we don't head a little bit lower before we go higher again. I don't think we go back and we test the lows. If we do, so what? Markets are still going higher. Now, Jeff has a question. He writes in, looking at the weekly commitment of traders report, the old one and the new one for the NASDAQ E-mini, I saw a big spike. Oh, we're going into a break. I'll read this to myself, see if I can answer it. And if not, well, then we'll go on to the next question. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So Jeff had asked, here's his question. Jeff is looking at the weekly commitment of traders report, specifically with regard to the NQ, and trying to go ahead and make a correlation from that. And Jeff, the only time I look at the commitment of traders report is really with regard to gold and silver, sometimes the yen, sometimes the makeup of the U.S. dollar index. I have never done any work on the NQ, the E-mini, with regard to being able to give you any kind of valid information. So if you've done your work on that, then that's cool. There's nothing that I can add. So thanks for the question, but there's just nothing that I can add here. But what I can do is, I've been asked by several inside the den, what is it that I would need to see to say that I'm just absolutely dead wrong, that we are now in this bear market, that we are in a bear market out here, and that top came in whenever that was, January 28th, something along those lines out here. So here it goes. This is the longer term prognosis, and we've touched on this, and I apologize for duplicating myself out here, but it's, you know, that's how we learn, right? We learn by repetition. Here's the chart of the Dow. So I'm just simply going to go back to the chart of the Dow, back into the 1800s. We're just simply going to start looking at it from 1924, 1927, when it made this little, what we'll call a breakout pattern. We've seen these patterns before. They, in essence, look and they start like A to B equals CD patterns. Now, in the vertical run in the Dow, a 350% run in the Dow from 1924 to 1929, there were many corrections. There's never a bear market correction, if you will, meaning 20% or more, but just simply by that value. We saw 9%. We saw a couple 9%. We saw a 6%. We saw a 12, a 10, a 13, a 12 out there, finally a 17 when we saw the so-called crash of 1929. So these corrections that happen once a year on average, this is a weekly chart, by the way, that we're looking at it, those are just normal inside a bull market out there. And it's really important to be able to try to identify the bottom. Now, that is step number one. What's also important about being able to take a look at these vertical markets is look at them on a logarithmic scale. That's a real key out here in a vertical market. If we take a look at the Dow, going back into the 1800s, well, this is like 1920 or so, and that just works for us. And we put this on a logarithmic. Many of you can put your charts on a logarithmic scale. We can draw a trend line. That trend line is really important. That's this blue diagonal line that goes from the high in 1929 to the next high out here in 1965. Now, what I want you to really pay attention to is the fact that when there was the so-called 1987 crash, and there was a crash in 1987, I want you to notice where price found support. Because if you had this on a non-algorithmic scale, you wouldn't have seen it. But now you can see it, because price stopped right there. Now, what's really interesting is we can take this same line and we can put this same line across the 2000 top and the 2007 top. So what would need to take place in order to say that my reading is absolutely, positively, 100% wrong out here is we would need to see price close below that. Where is that as we speak right now? Now we're just simply on a current chart of the Dow, and that gets us down into about 18,300. We're at 24. That's a long fall. That's another 6,000 points. But yes, price would have to get underneath that line to say, okay, now we've entered a new bear market. You see, that crash of 87, there's a lot that you and I can learn from that. And yes, that would be a long way down. But right now, what the Dow has done, or what it appears to have done, is we're in a whole new realm out here of pricing. Sort of makes sense the way that the Dow is priced. So where the Dow is headed to, at a minimum, this is what is in play right now. All we have to do is take a look at that same 1927 breakout pattern and apply it to the breakout pattern that took place between July of 2015 and February, really we'll call it April of 2016. And now what we know is we can go ahead and we can double the low, 15,370. You double that low, that's what gets you up to the 30,740. That's the so-called measured move. But remember, it's equal to or greater than out there. We don't even have a bearish reversal signal on the Dow as we speak right now. The month is not over. So we just simply don't have it. So what needs to take place? Price has to close below that logarithmic scale. If price continues to move down and it touches that, just like the 87 crash, people will be afraid to buy it. I won't be. Now, here's the deal in trading and investing. Whether you listen to or you buy into my charts and theories and things that I show you, I don't just simply throw this stuff out there. I just simply back it up with, hey, here are other instances. You go back and do the homework and see what you see as well out there. That way it's just not willy-nilly stuff. At least I don't think it's willy-nilly out here. And it's really valid. Is when you are trading and investing, even investing, you've got to have some type of stop in place. Even if it's a mental stop, you've got to have a timeout. You can't tell me that you raised your kids and you gave them a timeout and you're not willing to give yourself a timeout, especially when it comes to your money. You've got to have some stops in place out here because I can't control the markets any more than you can. And some kind of crazy thing could happen that just simply can send prices screaming. But at this stage here, the Dow has entered this new higher phase, and prices are going to continue to go higher. That's how I see it. These are the sets of charts and tools that I would use out there. As far as trying to get into some shorter term stuff, what needs to happen, because the question was about the S&P 500. For me, it's more about the NASDAQ, right? And when the NASDAQ, here's the weekly chart. At a minimum, in order to say that we're just simply going to see an A to B equals CD to the downside, as an example, we're going to go take out the lows of February 8th, 9th out there. I've got to see a bearish crossover, at least with regard to the market breadth out here. That, at a minimum, is something I need to see. I also would need to see these market profiles fail. And if we go take a look at these market profiles, if we take a look at the weekly market if we take a look at the daily market profile out here, if you're wondering why is it that the NQ keeps running into resistance, it's because it's running into the top of its profile level of 68.23. Look, if you see the NQ close above 68.23, and you know what it's doing right now, those of you that are expert stock readers, tape readers out here, know that when this thing is trying to break through the top, which it's doing, it's just chipping away, chipping away, chipping away. At what level? 68.23. It's going to chip away. And once it chips away at that and busts through that area, then it's going to head back to its highs and beyond. And here's the other element to consider. As you take a look at these daily charts out here, which chart is trading above the bottom of its market profile? That's correct. It's the Russell 2000. And in bull markets, who are the leaders? Who is setting the pace? The Russell 2000 and the NASDAQ, not the ES Mini and the Dow. These markets are headed higher. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Question here. Jeff writes in and asks if we could take a look at Netflix, NFLX. I'm still not a user of it, but I don't spend a whole lot of time actually watching TV and so forth. So that would be a reason why. We can see it's trading up at its highs, Jeff. So from just simply a market profile standpoint, it's up above its daily profile. It's up above its weekly profile. Where is the top of the box? 205. Yeah, it's up above the weekly, up above the monthly. So this thing looks pretty good. So let's go see, as this thing is moving into its highs, what is it doing? This thing had a major breakout back here in the trading day of January 23rd with 27 million shares. That's wide price spread, even though it's a gap. Remember, you need to fill in the gap. That's still, gaps are your friends. That is wide price spread, and that was accelerated volume. Now, the high was made out here on January 29th with 17 million shares. And that high, let's just put a yellow line across. I don't know if it was tested. Let's go see. Looks like a red line across it. Again, 268.81. Yesterday's high, 286.81. Yesterday's high, 286.64. Didn't make it. Lighter volume, 9.3 million shares. Nonetheless, it is still, not you, but Netflix is still trading inside that swing point. So it says that Netflix is likely going to go test the 286.81 level. Is it going to take it out? I don't know. Is it bearish? Do you short it? No. Maybe if it tests it and rejects that level line, lighter volume, meaning it tests 286.81, closes below 273.92, then maybe. But the reality is, what you need to see is this has support, good support, at least 245.82, if not above that. From a weekly perspective, the volume out there was 60 million shares. You're 23 million shares. It's Thursday. You're going to come in later. I don't see anything bearish about Netflix, and that was for Jeff. So, folks, stay tuned, because your favorite polar bear, he's my favorite polar bear. He's not Smokey the Bear. Remember, don't play with fire. But he's our favorite polar bear. That's David White. He's up next because it's Terrific Thursday. You got Tom O'Brien from 3 to 5, Andy Heck from 5 to 6, and I'll be back with you on Fantastic Friday. Take care and have a great day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.